The Hedgeless Horseman here. It's April 12th, 2024. First of all, thanks to the sponsors. Uh, this video was mostly gonna be about Inflection Resources. Just summing up my view on that right now. But I mean, I gotta touch on the fact that gold just broke through 2,400, the 2,400 level. Silver is starting to tickle $29, and copper is up, oil up. Let's see if we can. Dollar index, well, I guess that's flat right now. Uh, Crypto almost unchanged, but I mean, this is getting a bit scary, if you know what I mean. It's like somebody I talked to who said that we're gonna have a currency crisis very soon here. I mean, this is, I guess, the kind of situation where, every gold bug's dream is like, I mean, a lot of gold bugs are kind of doomsayers, I was gonna say. And I mean, I gotta admit, I'm a bit like that myself. It's like when you're so focused on gold and gold investments, gold miners. I mean, for your personal portfolio, you just want a higher gold price. Damn the cost, I was gonna say. The downside is, of course, which some people have said, is like most we don't even want to see $10,000 gold, because if that happens, shit has probably hit the fan for real, and we're talking fourth turning kind of stuff. So it feels a bit weird, and that's saying something, given that I think a lot of us are positioned better than 99.5% of people. Meaning that's like, yes, if you have been a doomsayer, whatever, or I can't come up with a better word, but you know what I mean. It's like this is kind of what we have somewhat prepared for, even though I guess a lot of people don't have enough physical gold and silver actually, or canned food or and stuff like that. Because I was gonna say, speculating in the juniors or minors, because that's still risk on capital. But I mean, this is this is a weird feeling. It's we seem to be, maybe again, entering really the end game. And the fourth turning stuff is like, the let's say, the debt bubble, the debt bubble, aka currency bubble. It's like the housing bubbles. It's like that. If we are nearing the end of the monetary system as we know it, I mean, that's gonna bring a lot of change, a lot of pain to a lot of people. Just think about, I mean, the pensions and stuff. So even though it's like, personally, I mean, I'm all in commodities. I have, some physical gold and silver. I have some canned food and stuff like that. So if this is really a currency, global perhaps currency crisis, that's like going into the terminal phase, let's say, before our eyes, um, I think we should consider ourselves blessed that we literally own percentages of real assets. Because if gold goes up in nominal and real term, means that obviously the gold we own in the ground is going up in value as well. So, and that's of course kind of behind the whole idea of gold miners and gold overall. It's not that you win necessarily. It's that pretty much everyone else loses so much that us having something is worth a lot if a lot of people ends up with nothing. Relatively speaking, just I mean, simple example is that let's say you're in a neighborhood. Uh, well, you probably are in some neighborhood, but like in your neighborhood, let's say you're the only guy who owns one gold coin. Everyone else has, let's say, has it in bubble stocks, crypto, and bonds. And not a lot, but it's like I mean, they're let's say they're not millionaires, but it's like that's where they have their assets. Or let's say you have 5 coins, whatever. You have 5 coins. They have the equivalent in nominal terms in a bunch of paper assets. A lot of them, let's say overvalued. Some of them literally worthless, and some in government bonds or whatever. Like if shit really would hit the fan, I mean, the purchasing power of that could go down immensely while you keep your purchasing power. You still have your gold. So if you went out and tried to bid on something, they have no money to bid on because their bonds are worthless. Let's say their meme stocks are worthless. Their crypto is worthless. Nobody wants to receive what they offer. And you have gold. You would be the richest person in that neighborhood just from not losing, not having the real value of something absolutely get decimated. So it's not per se, I mean, it's not like you got more gold. It's not like your 5 gold coins became 15, 30, 50 gold coins. You just still have your gold coins, which has real value. Whereas the people had their fiat wealth. I mean, on paper they had wealth, but now it went to zero. It's like, the Weimar Republic where, those famous pictures of people walking around with wheelbarrows barrels full of money and use that to basically, throw into the oven or fire, whatever, to heat their homes. And it was, of course, a famous guy, kind of nicknamed the Coal Baron, that who became, I think, at least the richest man in Germany for a time. And he was invested in like coal and railways and stuff, all the basic needs, the basic needs everybody need. I mean, you would trade a lot to heat your home. You would, if you needed to go somewhere, you kind of have to come up with a way to pay a ticket for a train ride, or maybe it was actually more like transporting goods or services or whatever. But it's like, unless society is completely gonna grind to a halt, you still have to have the basic services, like people having something to eat, people having some way to heat their homes. I mean, that's the last things that would go. I mean, if crypto disappeared tomorrow, there would be a lot of paper wealth lost. But obviously, and yes, I mean, in financial, in the financial network, whatever. I mean, that could lead to some systemic uh, collateral damage, and rings on the rings on water. But you know what I mean. I mean, there is not nobody needs crypto in any way, shape, or form. Really, it's not critical to society. It's like the basic needs: heat, shelter, food. That's the basic needs. That all requires some form of commodity. So I mean, we're obviously prepared for it. Uh, Better than most, at least. I mean, we're not billionaires with doomsday bunkers, living on an island with our own gardens, etc. Most of us aren't, at least. But like, this is weird. And I mean, again, I'm not saying. First of all, I have no idea what's actually gonna happen. I have no idea if maybe this is a false start or whatever. But it's like, something seems to be up. Let's just put it like that. And it makes absolute sense given the, let's say, the fiscal situation in the US and the world overall, and the obvious, paper bubbles and the government debt bubbles and the uh, rate bubbles, I was gonna say. Uh, so I mean, if the way I kind of see it, if you are prepared, you might be the only one in your household or in like your close family that actually are prepared for an eventuality like this. I mean, imagine how valuable you could become for just your, family and even friends. Um, if you actually, I mean, you held it out. You saw through the BS of like, yeah, we're gonna have a never-ending bull market in everything paper, but real assets, real hard assets. No, that's no value to see here. Don't worry about it. Go and find, go into crypto instead. I mean that's what I kinda see as a major added benefit. It's like just how one could potentially affect a lot of people's lives that we care about. Again, in case this is actually the start of something really, really bad, um, where a lot of people would lose a lot of money and basically societies would be turned upside down for a while at least. I mean, the fourth turning, the best part about the fourth turning is that it ends and then we go into the first turning. But it's and I've said this before. It's like, I mean, I don't really, or I should say, it's gonna be hard to pick a top or whatever. It's like even if you miss a top in gold and silver or whatever in real terms, basically, I mean, it's typically I guess gets worse and worse and worse until it resets, and then there some kind of rebalancing happens and stuff. I mean, politicians fix something when it breaks or has broken already. So I just assume that, I mean, gold and silver is gonna, might in an end game scenario might ramp and get more and more and more valuable right up until the peak. And at the same time, at that time, it's like, first of all, it's impossible to know where the top is, and how are you gonna? I mean, are you gonna sell something for like a shit ton of fiat, and because it's gone up a lot, and then the next day, they reset the system, and like they did in the Weimar Republic, where it's like, oh, the Reichsmark is worthless now, we're starting over, so everybody gets D-mark. So I mean, the way I see it, I kind of feel like, hey, I mean, I think it's best to almost carry it over into whatever comes after, because even though there might be a brief period of time where you get actually more, you have even higher purchasing power before the reset, you still get to probably keep a lot of that purchasing power after the reset. Like, I mean, in the Weimar Republic, where, as far as I understand, it's like I talked to a person who's not longer with us, but grew up in or was born in Germany, in Berlin, and he said basically that when the system resetted, um, if you had debt, you didn't escape the debt like mortgage debt. They just basically looked at, okay, what was the debt, your mortgage, worth in gold when you, let's say, took out the loan, or a period of time before the hyperinflation hit, let's say. Then that got carried over when the Reichsmark went away and they introduced the new Deutschmark, the D-mark. And as far as I understand, they basically, started over by sending every family or every person, I don't know exactly the specifics, 5,000 D-mark. So they again resetted the whole like paper wealth thing. Everybody started off with somewhere along the lines of the same paper wealth in the new monetary system. But of course, if you carried over, you had some gold coins tucked away. Uh, that's probably, I mean, again, you would be richer than everyone else who actually only had paper stuff. Even if Someone had, 10 billion Reichsmark. You had one gold coin. You start over. He gets 5,000 Deutschmark. You get 5,000 Deutschmark, and you have a gold coin. Maybe that gold coin is worth 15,000 Deutschmark. I don't know. I'm just making stuff up here, but you get my point. If that's the case, you would be 4 times as rich as that guy and everyone else who didn't have any real hard assets to speak of. So I mean, personally, when I see this, and it's like considering what it might signal, and as you know, I've been talking about this for quite a while. I mean, I personally, I talked about this. I think it was now maybe several months ago, but it's like I put up my let's say blue sky case for gold in terms of purchasing power. That okay, you have like a depressed sentiment, which we have now in the West. I mean, Western investors don't care about gold miners or gold in the ground or anything like that, even with a ramping gold and silver price. Uh, and of course, in gold rush, that's greed, right? People buy out of greed. People buy momentum. That's what we're seeing in crypto all the time. What happens if Western investors actually get scared, like for real? And it seems that the East have kind of been emptying the Western vaults. So how many ounces are left? How easy to actually get any sizable gold or silver, or I should say, especially if we get even close to the what Rick Rule says, the 40-year median whatever in exposure to gold, which is like 2% or something, and we're at like 0.68%. That's a tremendous amount of at least paper wealth that would want to, in terms of buying power. What if it becomes hard to even buy gold and silver in physical form if all of the West wakes up at the same time? And we know COMEX is a fractional reserve banking kind of thing, where it's like, yeah, they have, I don't know exactly, but they have 20 times leverage or something. It's like 1% of all the outstanding claims, let's say, actually gets a call. It's like we want the physical stuff. So I mean, COMEX probably doesn't have too much. Okay, that's a problem, and we don't know about LBMA or whatever. And we've seen obviously shortages before, where it's hard to buy. I mean, silver, I think, in coin form has been hard to get a few times just over the last a few years. I think during the pandemic, for example, and maybe the silver squeeze. So what happens if again this is the start of something really bad? I shouldn't say the start of something, but it's like we're going into a more critical terminal phase, and you can't buy, even if you wanted to, any real gold or silver. What do you do then if it just keeps on going up? We have a full-blown currency crisis. The world markets start to shake. Well, what's the next obvious step if you can't buy actual physical gold and silver, or whatever you might hide out in, like PGMs or even copper? Oil's gonna be hard, I guess. Well, that's metal in the ground. And if you're in that state, it's like you're not even in the greed state, or we're not in the greed state. We're in the fear of need state, which one could say is even stronger than greed, because greed is still, I'm more. I was gonna say. I mean, you have to take some risk, and it's like not everybody is greed. Not everybody knows about whatever crypto or financial, securities, yada yada. But it's like if there's a real like more mass panic, and people catch on. It's like, no, no, the feeling is that you have to buy gold and silver, or any kind of real assets. Obviously, gold and silver will probably be the go-to things because that's like 5,000 years of history. When we're talking the masses, like lines or queues to coin dealer or whatever, and it's like gold and silver goes up, nobody can really get any gold and silver because everybody wants it at the same time, and the prices just keep going up, and the paper exchanges might implode or shut down, so it becomes even more of a panic. What do you do then if you can't get a hold of gold and silver and you see gold and silver prices go up? Wouldn't it make perfect sense to, like, okay, in that case, I'm gonna go into gold miners. I'm gonna go into gold mines. They at least have it in the ground. They at least have it in the ground. Because you get, indirect exposure in that case. I mean, if it's a producer, you get actual exposure to I mean the product product, because it actually gets taken out of the ground. But otherwise, yeah. So that's how I kind of think about it. That's why I've also been talking more lately about jurisdiction, because in that kind of scenario, especially if it's fear. I mean, typically, even in greed, when people are like, well, there are no risks, maybe you would be okay to have more, riskier jurisdictions. But otherwise, I could see that, and this is Thomas Kaplan's thesis, that he expects, or I mean, he's open to the possibility. He said this a few years ago, I think now, that there might be a bubble within a bubble in the tier 1 jurisdictions within the mining space. That when shit hits the fan and people might flee, buy gold and silver in the ground for fear of need, out of fear, that they would maybe flock into the jurisdictions that felt safe. Because let's face it, if you're in fear and panic mode, risk is not at the top of the list, even if it's real or not real. Just the perception of risk is obviously enough. It's like, I mean, if you're scared, you're out in the dark woods, if you hear a twig snap or whatever, you're not waiting to see the evidence if it's a deer or if it's a bear. Just the fact that that's like a twig, uh, a twig snapped. I mean, that's enough to have you running the other way. So I don't see people being rational in a fear and panic mode, rational about risk. I see them reacting with their gut instinct, and that would be, again, trying to take as little risk as possible. So in those cases, I could really see, I mean, obviously, I think the major miners would probably go bananas, but still, I think gold in the ground in the smaller, well, I mean, in the juniors, I mean, gold in the ground overall in the jurisdictions that are perceived to be safe. That I think can really happen, and that's again why I lately have been talking about. I mostly focus on beta nowadays. I mean, it's not. I own a lot of alpha plays, and especially hybrid plays, and a few early stage exploration plays. I own anything that's. I mean, I think all of them are cheap. They just have these different risk profiles, like X amount of birds in the bush versus X amount of birds in the hand, etc. Still, my focus has been. I've been, most of the dry powder, for example, has gone into juniors with resources or probable resources in the better perceived jurisdictions. Because I don't, again, if we go into an irrational mass hysteria state, uh, I'm not sure if people, if we're talking from strictly like quote trading sardine perspective, because obviously a company could, it's like Great Bear, they never put out a resource, but everyone knew they had, a multi-million ounce deposit. So at face value, no resource. Uh, but for anyone who doesn't think like that or know anything about the story of Great Bear, maybe they wouldn't go out and buy Great Bear if they want to buy ounces in the ground. So it's like nobody, of course, knows the exact answer. We don't even know if this is the start of anything. We have no idea how people are going to react. We don't know what jurisdictions people will favor, anything like that, but we can only do the best we can. So if I had to choose two equally cheap juniors, yes, I would obviously pick the one with the perceived better jurisdiction behind it. So I guess that might be it. And again, you do as always, you do exactly what you want, and it's like I was gonna say I'm not too much talking my book, because it's not like the majority I have is gold beta, or resource plays in tier one jurisdictions. I mean, I have a bunch of different metals. I have early stage whatever, but it's like we don't know, first of all, that this is it. Maybe gold tops out here. We have a $300 correction, and then we kind of zigzag for a while, and the system, I'm not going to say gets fixed, but whatever is happening now, maybe that fear dies down, or maybe if it's about Iran, maybe or Israel or whatever. It's like maybe that conflict dies down or something like that. So we don't know. That's why it's like I'm never typically all in exactly one way. Where it's like, especially if I get it wrong, it's very punishing. Let's say. I mean, otherwise, if I knew this was gonna happen, maybe you would like, oh, I'm just gonna pile into Canadian, Australian, American, Scandinavian gold plays with a lot of ounces in the ground. Don't care what the grade is. Don't care about the quality of ounces. Don't care what the permitting situation is. Don't know anything. How feasible the project is over the long term, and just buy the highest amount of gold. I mean, theoretically, that could be the way to go, depending on what happens in the future. But of course, nobody knows that. That's why it's like, I'd rather be in the situation where I'm all in, but I'm kind of, even though my nickname suggests another thing entirely, that I'm kind of hedged for everything. If the economies, we kick the can, we need more copper, nickel, just from industrial uses, and silver actually, I'll do fine. If not, shit hits the fan. Well, I got gold, I got silver as well. Even PGMs might have a bid, especially again if we do end up seeing like, oh, we're running out of gold and silver to buy. Of course, I think people would buy other precious metals in that case, which we probably haven't seen for I don't know how long. So that's my preferred way of going about things, to make sure not to be completely wrong. Because if I went only all in, assuming one thing, and then it didn't happen, maybe the compounding implications would be pretty surreal. Like you buy the crappiest thing ever, and for some reason the metals just crash. And so your super optionality plays, they get absolutely hammered, and let's say the market doesn't come back, the metals doesn't come back until they have diluted another 30% or something. Whereas I could be in some company that could grow at the same time and at high quality ounces. So you know what I mean. I mean, there's such a thing as being too greedy. But yeah, so that's kind of how I'm thinking, just seeing this right now. that hey, this might be the start of the more accelerated end game, and in that case, maybe it is a pretty good idea to like okay, not at least be only in alpha place, only in exploration place, only in high risk jurisdictions, etc. Because again, I can see a future where Thomas Kaplan is right, and personally, I would feel better owning gold deposits in North America and Scandinavia and Australia, especially those four, I guess. I would feel quite a bit safer than if I owned them, only had African miners. But the funny thing is, when you think about it, um, which countries are actually most affected by the Western, let's say, debt bubble? I mean, let's say there, some African or South American countries where it's like, hey, I mean, they're self-sustainable, yada yada yada. Even if whatever, they don't trade much with the U.S. or anything like that. So even if the U.S. kind of went away, if the trillions of dollars in bonds went away, they didn't get affected that much, if you know what I mean. Because let's say Canada blows up, it's like the property bubble blows up, and they enter a currency crisis. Now they have a lot of commodities though, so it's like they're kind of internally hedged in a way. Or let's take the U.S. But you have some African country or South American country where it's like business as usual. They don't even have capital markets really, and they're not gonna, let's say, think about confiscating or nationalizing something because they're not having a crisis. But yeah, it's listed in Canada, but the asset is in wherever. It's like Tanzania, but they don't give two shits about North American markets imploding. I'm not saying that's gonna happen, but it's like, is there a possibility that some of the more, let's say, isolated countries around the world that are deemed to be lower, or higher risk perception wise, and probably in real terms as well, that they're actually, might be the safer places to have a mine. Maybe, but it's like I probably wouldn't bet on it really. I mean, I personally don't see the West nationalizing stuff. I mean, even during the, what was it, 1970s gold confiscation or whatever, whenever it was, the Nixon thing. Uh, Even then, I mean, the gold miners kept on prodding along. I think it was strictly a matter of they had to sell to the government or something like that. And I think they had a pretty good. I mean, you remember probably the Homestake chart, where it's like, yeah, Homestake actually did well. I think through the gold confiscation and depression and whatever. So I just don't see it. It's like, and of course, I mean, yes, even if it happens, we're not gonna, typically a company or a country, I don't think it's gonna go from, yes, we respect private property, we're very civilized, to all of a sudden it's like, let's nationalize the shit out of stuff, especially since we're leaning a bit right. I mean, Sweden has gone right. Trump looks like he's gonna get into office. Or do we expect that those politicians will like find it necessary? There's like, oh, your country, whatever, has a one or two gold mines. We're gonna put a huge emphasis on that. That's gonna solve the problem. No, I don't think so. And how many Western investors actually have a lot of gold and silver today? I mean, it's, close to all-time lows, I would think. Yeah, it's a 0.68%. That's not a lot. So what's that? I was gonna say really gonna solve. And the last time they did that, when I guess we had even more gold and silver in circulation, they didn't confiscate the miners. So I guess I'm still gonna stick with. I'm still gonna stick with. Yeah, it's like I probably feel better having the assets in the better jurisdictions. But at the same time, like always, like, does that mean, oh, I'm just gonna put everything into the U.S.? No, I don't think that's a good idea. I mean, I would say it's a good idea to, yeah, again, spread your risks. Because, like, the sentiment wave, I've been talking about, if you want to capture the big sentiment wave, diversification at lows is obviously, it's at the lows it makes peak sense, because you make sure you get the kind of index type run in juniors, and at the tops it makes the least sense, because you surely are going to have a big correction, because the entire sector is going to go down and you own the entire sector in a way. So I would probably just spread around different jurisdictions, because we don't know. It's like, why not silver gold mine in Mexico, maybe some stuff in US, Canada, Scandinavia, because that's also, I mean, closer to my home, and it's like I think Sweden is one of the best jurisdictions out there, and Australia, and maybe some bit of Africa as well. Because again, the one thing I'm most fearful about is getting it exactly wrong. Another example of that is that, okay, this high risk high reward exploration story is by far the cheapest stock out there. Let's say that's the best risk reward there is, but it's, let's say, still relatively high risk. So it's like, okay, if they make a discovery, let's say it's good odds 50%, really good odds in that case actually. If they make a discovery, it's like this is going to become a 30 bag, whereas if you had a bunch of beta plays, you would likely get a 10 bagger. I mean, yes, on surface it's the even cheaper, mathematically a lot cheaper, and let's say the expected return is actually a 20 bagger, and that's obviously quite outrageous. But let's pretend that's the case. But if they miss, let's say they only have that project or whatever, you end up with nothing. I mean, obviously, I would much rather take a probable 10 bagger than a potential 30 bagger, even though the expected value is that, oh, it's a 15 bagger. And the same goes, I think, commodities. I don't want to get exactly wrong or right. I mean, if copper just went on a tear and I own no copper, that would feel a bit shitty. And of course, if that happens, I might be able to, in that case, sell some of the copper juniors. Like, let's say they become overvalued. Then you can reinvest that in gold juniors or silver juniors or nickel juniors, etc., etc. That's like almost like value shuffling in a sense. It's just on a macro perspective or a commodity perspective. Otherwise, it's like, I mean, I think some might be like almost all in copper, maybe, because that's the commodity everyone agrees there's a shortage coming. But like, what happens if something goes wrong, or a new technology is invented, or we have a depression, or whatever. It's like something substitutes copper and you get it exactly wrong. Even though your case was sound, but a black swan event happened, let's say, you get it exactly wrong. How would that feel if you know that's like, well, the silver and gold juniors are equally as cheap almost as copper, but I'm simply more bullish on copper. I'm going to put all my eggs in one basket. If you're exactly wrong, that's going to feel really shitty. If you're exactly right, that copper actually goes up, yes, that's going to be feel absolutely great. But obviously, that can backfire. It's like people in crypto. let's say you made a ton of money in Bitcoin. Yeah, okay, you have made a ton of money in Bitcoin. Does that mean that you're forever gonna make a ton of money in crypto? No. So let's say, or as I remember when the initial coin offerings were so hot, people that I know or knew kinda at least over the internet, they were saying that it's like printing money. Every single coin offering went up like hundreds of percent. So what do you think that they do after they bet or they see something goes up several hundreds of percent after an initial coin offering, like printing money? Of course, you're gonna get greedy, and they kept on betting as much as they could in initial coin offerings. The goose that laid the golden eggs until it didn't. Or it's like roulette. If you bet everything on black, let's say you ride three times in a row, so you double up, then double up, then double up. It only takes one red, if you're still betting on black, to wipe you out. So it works until it doesn't. And of course, for a long-term perspective, the best compounding thing to keep in mind is having a strategy that works over the long term, not only one-off bets, high-risk bets. Let's say there's like, oh, if this happens, yeah, maybe if you're like, oh, okay, I'm betting everything on this, and if it works, I'm gonna retire, never play again. But at the same time, what happens if it goes south? Yada yada. So it's, yeah, I mean, it's interesting thought experiment, and of course, like always, nobody has the exact correct answer. All we can do is play the cards we're dealt and play them the best we can. And I think diversification from a commodity perspective makes sense. I mean, I would say gold is probably the least risky in the sense that it's been around for 5,000 years and the appetite seems to be going up. But at the same time, yes, it doesn't have the above, or it has a lot of above ground supply. So in copper, it could be a bit, more violent in a way, but it doesn't have the same cultural, or cultural, emotional history as gold. It doesn't have. I mean, nobody really flees into copper during a currency crisis, I would think, and stuff like that. So there's always facets with every, I guess, commodity, and it's like silver has the solar panel thing, but a lot of above ground silver probably exists as well. Uh, so gold, in my opinion, I mean, personally, I think gold juniors are still probably the cheapest ones. I mean, has copper done well? I mean, it's above $4. It was like, are copper miners printing that much money now? How would a copper project look at on paper at 4.28 per pound? Would it look like, oh, IRR, so 60%, and it's like printing cash, hand over fist? No, I don't think so. Gold projects, however, at $2,400 gold, I think a lot of projects would have very high, especially the better ones, would have a lot of high IRR, very high margins and all that. And where are they priced like that? No, they're kind of in the dumpster with the gold stocks. So I mean, all things considered, I personally think that gold is probably gold juniors or gold miners are probably the best pure risk reward with an emphasis on the risk out of any commodity junior segment. Then maybe, I don't know, maybe silver because it has, I mean, precious metals and industrial uses. And then of course over the long term, since the world will probably not end this time around, copper, nickel, PGMs even. So yeah, that was a long rant, but I hope made some sense. I was actually going to talk about Inflection Resources, but I just went on a rant, I guess. Hope you appreciate it if I mention any companies. Assume I'm biased. Make up your own mind. Like always, nobody, to quote Bob Moriarty, nobody knows anything. We have no idea what's exactly happening, how the world is going to look even tomorrow. a week, a month, or a year ago. It's like I focus on what's cheap, and I have, of course, some kind of macro picture that I think gold and silver will do well given the state of the world. And copper and nickel given the state of the copper and nickel, state of affairs over the long term. I mean, in nickel, obviously, there's Indonesian supply. That's the big boogeyman, but they won't be around forever. And that goes for any single mine in the world today. Every single mine in the world today is going to run out. Gold, copper, nickel, platinum, palladium, whatever. Every single mine is going to need to be replaced just to keep production even. So I mean, I think we have a pretty convincing cases for all metals basically, and that's why I buy them in the ground. That they are the future supply. If you don't find any more tier 1 mines, let's say in gold, what happens when the tier 1 mines run out? Cost structure goes up. Either you're gonna have gold, and in that case it has to go up because the supply is not there, because all the tier 1 assets are gone, and nobody would bring in a tier 2 asset unless you make money on it. So they're not going to come online. So the supply is going to shrink, and probably the demand is going to push them higher until the tier 2 mines of today is the tier 1 mines of tomorrow. So it's like the worse this sector gets in a way, in terms of whatever discoveries and capital investments, yada yada. I mean, it just makes the future prices go even higher. That's the beauty of it, I guess. Thanks for listening. Not investing advice. Bye.